Right, for more on what's moving the markets, I'm joined by Trevor Garvin, who's head of multi-management at Net Group Investment. Trevor, a very good afternoon to you. Thank you for your time. The conflict in the Middle East continues to escalate. I mean, the ripple effect is that we're seeing Brent crude oil trade at around $92 per barrel. How concerned should the markets be about further supply disruptions?
Hi, good afternoon, and great to be with you today. So yes, I think that's exactly spot on. And as you've said, we've seen Brent crude prices go up in the last 10 days or so. I mean, it went to a bottom of about $72 a barrel, which is roughly where it was when the conflict started. We know it went all the way up to about $120 a barrel. And now today it's sitting at $92, $93 a barrel. So yes, it's up about 15% in the last week and 30% just in the last month. So the negative impact of this on markets is that we are going to start seeing those inflationary pressures coming back into the market with expectations of possible now interest rate hikes instead of perhaps holding interest rates flat. And all of that is not good for economic growth, and nor is it good for stock markets. And I think very importantly, the US Fed has a new governor or chairman, Kevin Warsh, and he's also come out to say that he will be watching closely US inflation. That's sitting at around 3.5% or so. They want to get it to about 2.5%. So we need to carefully watch what the US Fed does to interest rates as well, which will have an impact on South Africa as well.
While you're still on the US, we know that President Donald Trump is preparing a fresh round of tariffs on several countries as his temporary trade measures expire. How significant is that latest move?
I think it is interesting. And yes, he announced yesterday that he is imposing 50% tariffs on Canada. I thought it was quite interesting because just 2 days before that, he was sitting with the Prime Minister of Canada at the World Cup soccer finals, and then 2 days later put 50% tariffs on them. And the reality is actually that those tariffs on Canada are actually not going to make a material difference. It's about, at most, 4 to 5% of Canada's total annual exports. It's about $20 billion or so in total. So it's more what it symbolizes, I think. And yes, we know President Trump can be quite erratic. He can be quite emotional in what he does with tariffs. And certainly, I think we need to be watching as August the 19th comes along, which is when the old tariffs expire, what he's going to do in terms of tariffs. He's pretty much set them at around about 10% with most countries around the world. Is the 50% on Canada going to be now a marker for other countries? We're going to need to be waiting and seeing. But overall, tariffs are not good for markets because it pushes prices up, it's inflationary, and it causes inefficiencies in what hopefully would be a market that is efficient. So they're not great for global trade.
As we look at developments here at home, I mean, South Africa's latest inflation numbers are also out today, coming in at 5%, the highest in 2 years. And as we assess the current developments, oil prices are climbing. What does this mean for fuel prices, inflation, and ultimately the cost of living for both consumers and business?
Sadly, not great news, as you're mentioning. I think what's sad is that it looked like we were heading in the right direction, actually. And suddenly now we have the renewed strikes happening in the Middle East, pushing up oil prices and putting back pressure on inflation. So you're right. Over the last month, we've had material increases again in the price of oil, which is going to push prices of petrol and diesel up again in South Africa, having just had them reduced because the oil price had come down nicely to that $72 or so. So yes, we're going to see inflationary pressures building, and actually the Monetary Policy Committee of South Africa is meeting tomorrow,
Yes.
where they will then announce what changes to interest rates they may do in the markets. And I would say it's looking 50-50. Until a few weeks ago, I would have said we were not going to have any interest rate hikes. They would keep things on hold. But now I think there's a chance that they may raise interest rates by 25 basis points tomorrow. 50-50 chance, but that won't be good for the consumer. And certainly it pushes the price of cost of living up.
Very well. Thank you very much, Trevor Garvin, Head of Multi-Management at Net Group Investments. 50-50 chance, looking at the ripple effect, the CPI data coming out higher than expected at 5%. And as we watch to see what the Reserve Bank's Monetary Policy Committee does tomorrow, Trevor saying that it could be a 50-50 chance.